Good morning, everybody. Hope your Monday and your trading day is off to a great start. We've spent the morning talking about stocks. We've been talking about crypto. We've been doing some live trading. It is time to take the time we take every week to talk about futures trading with NinjaTrader and Jim Cagnina. Let's go. Get ready for some futures. We're in it now. All right, I am joined by Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. Jim, how are you doing? How was your weekend, and how was your Monday off to?
Everything was great. We had a great weekend, nice, relaxing, nothing too crazy. Watched a lot of football was the thing. And so far, Monday's off to a huge start. There's going to be some terrific opportunities in the futures markets this week.
Let's start with those opportunities. Let's see what today's market is doing. I've got your chart up on the screen. What are we looking at right now?
All right, we are looking at the S&P 500 stock index futures. This is the E-mini contract, very popular, a lot of activity going on here. And we're seeing certainly a bull market, right? And what we see is a lot of green candles. Green candles means the market's going up. I even drew a channel, a really nice trend channel on the chart. And this is a daily chart. And it's strong. This is a strong market. The idea that it can't go any higher, just get it out of your head. It could go a lot higher. So that's my takeaway. Right now, my bias is bullish for sure, which means from a day trading point of view, looking for places to buy. Any given day, anything could happen. Let's just set that aside as a fact. But this is looking really, really strong right now. Moving average crosses here are diverging. The CCI is well over 100. My oscillator down here at the bottom. And then interestingly, we had the recent Fed, action or non-action, depending on your point of view. And this week, today in particular, they're wheeling out some more Fed people. We got Jerome Powell, who's the chairman, the big fish. We got Richard, Clarida is the vice chair. Kenneth Montgomery from Boston. He's the CEO and president of the Boston Fed. Patrick Harker, CEO and president of the Philly Fed, and Charles Evans, the CEO and president of the Chicago Fed. So they go out and they kind of speak their minds, and most of them are in line with the party line. So we'll see.
So what you're saying here really is we're getting a parade of Fed speakers today that combined with whose job it is to make the market feel okay about what the Fed said last week, and that combined with that uptrend you see on the chart means you are just staying the same. It's the same story for you. You have been nothing if not consistent this entire time. You are remaining in the bull camp.
Absolutely. And we could even take a look at the daily chart if we're ready for it. Let's do it. All right, I'm gonna minimize this guy. We're gonna open up the intraday 10-minute chart here. And this is a 10-minute candle instead of a daily candle. And this is what we look at when we're coming up with a trade idea. And I actually have already put one into the book here right now. And this is this buy limit order, right? I'm waiting for a pullback here, somewhere between that fib lines of 38.2 and 50%. I'd like to kind of pick up a unit down here and see if we can get back up to the tops, the highs of the day.
All right, so that's the S&P 500 index futures. That's your main indicator. What we've been trying to do, guys, is every week, maybe not, we don't have to do it, but Jim has been kind enough to try to set up a trade for us in every chart that we look at. So do we have a trade set up today here?
Yeah, so the trade setup, and again, I'm in real-time simulated live mode on the NinjaTrader platform with a real-time data feed. And right now, what I'm trying to do is to buy a E-mini S&P contract at a price of 46.92 3/4, which is indicated by that blue label right here.
Why though?
So the reason is this. So we see a lot of volume that's accumulated early this morning. It's on this dark blue kind of volume histogram or volume profile. We see in a lot of volume up here, and it's represented kind of a paradigm shift from last night, right? Last night, this light blue volume down here was kind of going sideways, not a lot happening. Then we opened and boom, everything kind of moved north. And we have this point of control here, this golden line here, which is where the most volumes traded so far this session, including last night. And because the idea, I like the idea of being patient, letting the market come back to you to try to establish the position in the direction you want to be in. And I think it's a reasonable idea that prices could pull back down to the bottom of this dark blue value area, one standard deviation worth of volume. And it kind of is in line with, just above the 50% retracement. So I feel real comfortable about it. It's maybe, I don't know, maybe it's a conservative trade idea, but so I'm using the volume, I'm using the Fibonacci retracement, and then I'm going to kind of keep my eye down here on my other oscillators. So the CCI is kind of neutral. I'm not too worried about it.
CCI, I don't think we've talked about that indicator too much. Can you explain that one?
Yeah, so a lot of traders like to have an oscillator, right? A MACD, RSI, tricks, something like that. I use the commodity channel index, and again, it's a personal preference. It's called, and it's abbreviated CCI. It's called commodity channel index, and you can apply it to any kind of financial instrument or equity instrument that you want. And it oscillates around a zero line, right? And then, the idea that if it's very, very positive, the market's overbought. If it's very, very negative, the market's oversold. And I like to see, a slope of the CCI that's pretty sharp to give me an indication of momentum. It's a momentum indicator right now. So things are slowing down on the CCI, but we're still above a zero, and it's not really moving that fast. So I'm comfortable with where we're at. I think supply and demand starting to slow down a little bit.
Okay. And within the context of the rest of the chart, though, what does it really tell you?
Right now it's neutral. It's not giving me any signs of any warning signs. It's not giving me anything to help with my trade idea. It's kind of neutral right now.
Okay. So not really helpful is the answer for right now. So we have a buy order standing out there, right? We have an entry point.
Yes.
Do we have, if we get a fill, do we have an exit point here?
We will, for sure. And so we have this little dotted purple line here, right? And it's below the 61.8% retracement. That dotted line there is going to be an area of interest to me, and that's the previous session's close. Right. And so the previous session's close is important to me, because if we start trading below there and these candles start trading below there, then, maybe from today's point of view, the market's going to retrace a little bit.
Yeah. How do I see that? I mean, you have a line there, but how would I see that otherwise? That was the close from the Friday night session. How would I see that close?
So, well, I simply added it. So there's an indicator on the chart. Yeah. There's literally here. I'll show you. We'll right click and we'll add I'll show you my setup here on my, what I have on the chart. So I have a volume profile here.
Oh, there it is. Okay.
CCI, and then prior open, high, low, close, and it's color coded. So I could kind of pick and choose what I want to see. And so that's how I have it. So it's kind of a visual crutch for me. I should probably know the number off the top of my head every day, but I don't.
Hey, no judgment here. No judgment here. I forget numbers the second I hear them. So it's good that you have it on the chart. So okay, that's 7 points away. Did I read that right? And that's what we're comfortable risking on this trade.
Yeah, so this would be a $350. So it's every point is worth $50, right? So 7 times 50 is $350. Now the good news is if you want to participate in the market with less risk and you have a smaller size account, you could trade a micro E-mini S&P, which is very liquid, and it's 1/10 the size, right? So instead of that $350, it's $35, and it gives you, if you did 2 contracts in the micros, it'd be $70. So it gives you more flexibility.
Okay. All right, we have ourselves a trade set up. We'll see if we can get filled on the S&P 500 index futures. What else are you looking at here today, Jim?
So let's shoot over to now that we're talking about Bitcoin, let's shoot over to micro Bitcoin. Yeah. I'm going to pull up a daily chart with the bigger size Bitcoin. And this is because we have more history because it's been around longer. So there's two versions of the Bitcoin, the big Bitcoin, and then the micro Bitcoin, which is more my favorite. It's a 50th smaller instead of the 10th smaller. And so right now I have I have a moving average cross here and that a moving average, that golden line. I have a fib, what's called an extension up here, which is giving me targets. I'm bullish on this market also.
Okay.
The CCI, again, it's, on a daily chart, it doesn't move as quickly, but it's, hovering around 50, minus 50, not a big deal. And I really want to see this market kind of make some contemporary new highs in the micro Bitcoin and print a 666 and a 71,916 number. So those are targets for me on the upside on a longer term basis. And I think this pattern is kind of bullish also.
Real fast, Easy Mike just commented that the micro, I think it's like on the micro e-minis. Never mind. All right, so we're okay, my bad. We're talking about the micro Bitcoin futures here. So, well, this is actually the regular Bitcoin.
This is the regular Bitcoin. The prices are going to be in line with the micro.
Okay, gotcha. But you like the micro?
Yeah, let's pull that one up right now while we're at it. And I'm just going to go to my software here. We're going to do a couple of really, really easy configs.
Wait a minute. Are those the same orders we had from Friday last week? I'm trying to.
No. I put these in. I put these in this morning, right when we start. Right before we started today. And again, I'm lining these up with a couple of areas of interest. So right now we're trading at 65,950. And the orders that I have put in here are limit orders right below the 38.2% retracement level. And if you go all the way to the left, we're still in the value area. So I really like this as a potential target here. We're in that dark blue area volume we talked about. And then I've just aligned a couple other orders here with the 50% and the 61.8%, which might not happen today. You never know with this market because it is very volatile. But what I'd be doing is scaling into a position, right? So I'd be scaling into a position with I don't know, cost average dollar, whatever you want to call it, which you could do with the micros because again they're smaller size contracts and relative to your account size, maybe you could do that.
Okay, so we have 3 buy orders here. We've outlined why. Do we want to outline where we'd sell and why, or?
Yeah, so what I'd look for today is, we see a lot of volume up here at the top of the value area. If you kind of go to the left and look where my crosshairs are,
see that.
there's a cluster of
Did we lose Jim?
Spencer here, but that's okay.
Oh no, I got you. I got you back. Okay. I got you back.
So up here is my profit target. If we were gonna go ahead and do that, and I'll just go ahead and just put these orders in right now into the sim account. And there, oops, here we go. Are you with me still, Spence?
I'm with you. I'm here.
I'm getting these like connection losts every once in a while.
I'm here, man. We got you.
All right. So anyway, in any event, there was my target. That would be my target for that particular trade idea. And then from a stop loss point of view, it's a little bit trickier, right? Because once candles start closing below a 61.8, 10-minute candles start closing below the 61.8, sometimes my point of view is it's no longer a retracement. We've changed direction. Right. So I'm kind of cognizant of that. And right now I'm going to be 50% between the two, more or less. And that would be a stop. That would be where we kind of do a stop. Okay. So that's the anatomy of this kind of trade.
Can you explain why this kind of a trade would be a good hedge against inflation?
It's a great question. I mean, what's a better is Bitcoin a hedge against inflation, and has it been, right? Are people putting cash in and let me show you what I mean by cash into the market. Now here's the M1 money supply, right? And I just pulled up the Fed's Fred. I pulled up Fred on the St. Louis Fed's website, and this tracks M1. And what M1 is, if you remember from college or high school, probably college economics, it's money that's immediately converted into cash, right? You can go to the bank and you could take out $100 from your checking account immediately, right? And that's the definition of highly liquid money. And here we see, this huge accumulation of this available cash right now, and it needs to go somewhere, right? Eventually, it needs to go somewhere as the pandemic kind of slows down, and as the dynamics change with inflation, the money needs to go somewhere. So my guess is a lot of the folks, I'm going to use a under 50 years old or younger,
Yeah.
are going to say, hey, I'm not going to buy gold as my hedge. I'm going to buy Bitcoin as my hedge. And I think we're seeing a lot of that right now. I mean, Peter Thiel was on TV yesterday saying this exact same thing, and I think it could be true. And I don't know. I think there's a lot of upside here, and I think there's a lot of cash that could shoot into this from an inflation worry or inflation hedge point of view, especially in light of the concerns about the equity markets and the bond markets.
Yeah. Well, I mean, hey, I'm looking at the chart today. I'm seeing what you're seeing, right? Bitcoin had the futures at 66,000, almost 67,000 this morning.
Yeah.
So, that's certainly in play. Ethereum too, for that matter. It's not just Bitcoin, it's Ethereum.
Yeah, that's right. And that's the kind of the confusing part of all this, right? But the one thing I like about the CME Group Bitcoin product offerings is it's a centralized exchange, and it's starting to become a nucleus of other Bitcoin related activity, right? So from a hedging point of view, people are developing products around the CME Group futures market. So that's a really good thing. And as we go forward, we should get more and more volume.
It's true. What Jim is referring to is the Bitcoin futures ETFs, which in theory, the more products that are built around one product, in this case, that are built around the Bitcoin futures, the better that is for the Bitcoin futures, just as a product with staying power. Because there was another Bitcoin futures from the CBOE that they shut that down because the market just never caught on, right?
Right. Yeah. And CBOE, they were an early adopter, and they just weren't getting. I think they weren't getting traction, and they decided just to shelve it from the risk profile of it was too much for them to handle.
Yeah.
CME is a different animal, though. CME Group is very, very big, great trading technology, and they have their handle on risk.
Zaber, I don't know how I quite pronounce that in the chat, is asking if you can repeat when the change of direction would be. I think he's referring to the micro Bitcoin. I think it's what we talked about that.
I'm sorry, I don't understand the change.
Can you repeat when the change of direction? I think he's referring to the trade setup that we just walked through on Bitcoin. I think.
Okay, well,
be more specific, please, so we can hopefully answer that question.
Okay, so if I understand the question correctly, what I've shown on this chart, let's start over with the volume profile, right? The volume profile is high with respect to where it started at, right? Low volume early morning, a lot of appreciation, or I should say last night, and then a lot of volume started accumulating. So this is kind of like a P formation if you think of a letter. And so there's a lot of volume up here. So the paired end of the market right now is up here, right? And again, I'm bullish on this market. So
he means using the fibs.
Yeah. So using the fibs, using the fibs is simply a technique where you could rely on the main three fib numbers, and really only two of them are fib numbers, but the 38.2% is a very important area of interest, and a lot of times the market retraces back to that area and then goes on its merry way. The 61.8% is a lot further down. That's another fib number that for a bigger size contract we wouldn't be doing this, but for the smaller size contract we are hoping to get a pullback down to that level, and then we go back our merry way. The 50%. And I say it's not a fib, but it's a common number that's used within the fib family because it's 50%, but it's not based on the Fibonacci sequence. It's just kind of thrown in there, but it has a self-fulfilling prophecy also oftentimes. And so that's where my third target is. I'm more optimistic of getting the first unit, and less optimistic about getting the second unit today.
Okay. Hey, let's do this. Let's every week we always have like a tip of the day or a tip of the week. Let's go through that, and then afterwards we typically spend most of these shows looking at the same few markets, where the S&P 500, the Bitcoin futures. Let's after we do the tip of the week, we'll go into some other markets here if we have more time. So let's get into Jim's tip of the week if we can do that right now. What do we got for us here?
All right, the tip of the week. This is going to be a good one. This Wednesday. Now, Wednesday morning, the Bureau of Labor Statistics is issuing their CPI number. The number is coming out Wednesday morning. Consumer Price Index. Here's their definition. Consumer Price Index is a measure of the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. That's Wednesday, monthly number. Now we're talking about inflation, right? Being maybe less transitory. Fed has said it's going to be less transitory than we thought, and they're shooting for an average of 2% instead of a max of 2%. Now they've changed their tune a little bit with respect to interest rates. And right now, the consensus is this. This is the consensus of the polled economists that says we expect this number to be, and there's four numbers that are subcategories of this. Month over month CPI consensus for Wednesday is expected to be 0.5%. Year over year consensus is supposed to be 5.8%. When they take away food and energy, I don't know why they do that. Month over month is.
I don't know what to do it either.
That's pretty much everything we consume, right? Is food and energy.
I don't know.
But I suppose you want to buy a new computer, or you want to buy a couch or a television set. It's 0.4% month over month, and not too far off the main number. And then year over year, 4.3%. So this is what's expected, and usually it's pretty good. Their projections are usually pretty good. However, every once in a while they're not. And when that happens, it could really change the direction of the market. So right now I'm bullish. We'll see what happens with this market, and we'll see if we start getting some negative asset prices.
Again, Wednesday, right, at 8:30 a.m. Eastern time.
Well, it would be yes, exactly.
7:30 Central, 8:30
Yep.
Eastern.
Yep.
The CPI number, we were talking about this last week when we got the jobs report. Jobs report typically seen as the most important economic data point. That's probably not the case right now. CPI is probably the indicator that of the 6 economic data points that the market gets on any given week. CPI probably the most important right now for market sentiment. So that's why Jim, I think, highlighted that.
Yeah, in the early 2000s, I mean, we've seen CPI numbers move the bond markets four handles, which would be $4,000 per contract. Just crazy stuff. We'll see what happens Wednesday, but you just pay attention to it, and there might be some opportunities as a result of it.
Okay, so let's take some questions from the chat, and let's look at some other markets, Jim, because we spend all the time looking at the major ones, the S&P 500 futures, the Bitcoin futures, the micro Bitcoin futures, but there's futures markets for everything and anything. So let's go over to commodity land for a second here.
Okay.
And just let's take stock of what's going on over maybe in the oil markets, or we can look at any of them, frankly, because I would love to get your thoughts, because we don't talk about them enough.
Yeah, so I hear you, man. And then crude oil is a great market. There's also a micro version of the crude oil, which is also a great market. And we see a lot. We see OPEC Plus in the news. We see pipelines being shut down or open. We see fracking and all this stuff that kind of folds into the supply and demand question of crude oil futures. Why is that good for us? Is because it gives us, again, opportunity with price fluctuations to participate from a day trading point of view. So right now, we're 81, 87 on this particular blend of crude oil, and this is a benchmark, global benchmark. It's called West Texas Intermediary crude oil. It's light sweet crude, and the chemical composition of light sweet crude is more desirable than sour crude because it's easier to make into gasoline. Yep. And so it's widely tracked. This is a U.S. product delivered at Cushing, Oklahoma. on a standardized contract basis. But from a day trading point of view, there's lots of opportunities here, and you see a real nice normal distribution on the volume profile today. The market's trading right between the bottom and top of the value area, and I expect there's going to be some pretty good opportunities here to be buying right at the, in my opinion, again, buying toward the bottom of the value area and selling toward the top of the value area as this kind of oscillates around the point of control. And one thing I want to point out, Spencer, if I have an extra second, I'm going to put my cursor on the point of control, which is 8180. That's the longest volume histogram bar. The most volume is traded there today. And you can see almost every single candle has traded through that price today. The point of control on normal distribution days, oftentimes, not always, acts as a magnet, a price magnet.
Why is that?
I don't know. It's just a weird observation. It just seems like, this whole battle between supply and demand settles at this area on these days where there's not, I don't know, a new report, a runaway trend, an OPEC announcement, or some other type of thing that could impact the supply of the market. But it's just something to keep in mind of. It doesn't always work. But it does tend to attract price after it's established.
All right. If you have a particular market you would love Jim to look at, I don't mean stock. I mean a particular futures market, whether it's a metal, whether it's a commodity, a soft, a grain, corn, copper, whatever whether it's a treasuries market, right? Or whether it's something forex related. I don't even know if there are forex futures, but maybe I just made that up. Some other stock index. Hey, we got a few here. Why don't you look at palladium? Can we look at palladium here?
Yeah, that's kind of there's not a lot of volume there. That's not a market that I wouldn't ordinarily look at. But gold is. I'll just pop a gold chart up here right now.
Now they're coming.
Yeah, so gold is another thing, right? And we were talking about breaking that psychological 1800 level, and we finally did. And now we're kind of, experiencing some, in my opinion, inflation fear related participation in the gold market right now. So we're about $20 over that, $24 over that magical 1800 number that we were kind of bumping up against for a long time. And again, I think this market might be a little bullish now. I think there might be some opportunities to actually get long this market. So I would kind of keep an eye on that. And it's very tradable. There's also a micro gold, so keep that in mind as well. And I'm just going to link some charts up here so we could toggle between markets if we have to, including silver. Maybe is a good one. Maybe we could kind of look at. I just kind of popped up a silver chart equally as strong as $24.44 for the silver market. That's looking pretty strong as well. And again, some really good trading opportunities. Silver's a bigger size contract, so be careful trading it.
Jojo asked if you look at the coffee futures market.
I don't not have coffee.
Do not trade coffee. I don't think anyone trades coffee, Jojo. I'll be honest with you.
Well, here's the thing about the softs. Cotton, coffee, sugar. They're really specialty markets.
Yeah.
And it requires a whole set of analysis skills that, quite frankly, I don't have. But they're really niche markets, and they're the old school commodity markets. They're day tradable, but they're mostly hedge and commercial markets.
Can we pull up the Ethereum futures again first? I think we were on it for like a second earlier.
I just have the Bitcoin, micro Bitcoin.
Oh, you don't do ETH?
No.
Okay. Easy Mike says he loves soybeans, and he loves sugar. Again, these obscure futures markets that you've mostly envisioned the people down, in the trading pits.
Well, I mean, here's a soybean market. Is the soybean market I put up on the chart, and it's a good market, but again, it's a great market to trade. And even if you're day trading or swing trading or position trading, it's a specialty market. You got old crop, new crop, you got the crush, you have all sorts of different weather considerations. If you're going to trade this, great, be an expert at it, and just develop your muscle memory and do your research, and hopefully you could do well.
Hey, let's go back to the S&Ps. Or even the Bitcoin? Do we ever get a fill? on any of those? Let's check.
Yes, no, we're still kind of like hovering around that magical point of control that we talked about.
Okay.
And if there's more aggressive moves in this market, as an example, trading off the 38.2 or even trading off the 23.6. But my worry here is we're right up against that point of control. So I would probably, from an aggressive point of view, if I wanted to be aggressive, I'd kind of pull this kind of my trade idea closer to the bottom of the contemporary candle we're at.
Okay.
And then say, all right, I want to be more aggressive. I want to get long now. I don't want to wait. So that's an idea. We have not get filled yet. The micro Bitcoin, no, we're still way away from that. We're not at that point as well. Other markets, though, that are interesting to me include the Treasury bonds. And you're going to have a situation here with interest rates. The paradigm of the interest rate market is starting to change, right? We're having the yield curve is starting to flatten. The belly of it, anyway. When I say the belly of it, from the 2-year to the 10-year, in that area is starting to flatten, and which is unique because usually that happens at the end of an interest rate lowering cycle instead of at the beginning of a cycle potentially where interest rates are going to rise. So it's kind of freaking people out, but it's happening. And but these particular markets, and this is the market I started at on the floor back in the early 80s. I know I don't look that old, but it's a great market to trade. So it's very tradable, and it's got decent amount of volume. If you look across my quote board here, about 172,000 contracts already. So this is the longer duration end of the yield curve.
All right, let's do one more here. We'll do it for Theodore. He asked about the Russell. Can we look at the RTY, please?
Yeah.
That's a nice, thick liquid market.
Yeah. Let me kind of get my
One
chart
I have
here
on my screen at all times.
Yeah. Now the interesting thing about this particular market is it doesn't always march to the same drummer as the S&P and the Nasdaq, right? It's small cap, the smallest 2,000 based on a cap in the 3,000 Russell index, if that makes sense. But yeah, it's a great market to trade, and it's the profile today is very similar to the other equity markets right now, and there's probably some really good trade ideas here. And look at that point of control again: 1, 2, 3, 4, 5, 6, 7, 8 different of the last candles have traded through that point of control. The NinjaTrader order flow package is awesome, and it could be really, really helpful.
And then Theodore, I think going back to what the prior chart, he goes, Jimmy, if we're at 40 bips, what does that signal if the spread goes higher?
For which market? I'm sorry.
For the fixed income, we were just looking at the 10-year. What were we just looking at?
Yeah, this is a 30-year, right?
30-year,
so I'm looking at the 30-year, and then repeat that question one more time for me.
Theodore, it's up on the screen here. Jim, I'm just going to read directly. I don't want to butcher his question. If we are at 40 or so bips, what does that signal if the spread goes higher?
Well, with respect,
the spread between yields, the 10-year and the 30-year.
Yeah. So I would expect that the 30-year bond, and I've been expecting this a while, and I'm trying to be patient for it, is going to depreciate faster. I think you're going to see a bigger swing on the downside on the 30-year bonds here. We're at 162 right now, which is pretty strong, but I wouldn't be surprised if we get into the 150s relatively soon.
Okay. Hey, Jim, before we go, I want to give you the chance. Tell people where they can see more, hear more, learn more from you.
Yeah, so I mean, we every week we have a whole series of events. We do a Tuesday and Wednesday live trade setup events, 10 o'clock Eastern time. It's on our platform education page where you can get the link to that, and it's
on the bottom of the screen right now and in the description. I would just say, and I learned this the hard way, these links are case sensitive. So on the bottom of the screen now, you see ninjatrader.com/platform training, right? The P and the T, capital, case sensitive. That'll get you to the page. I learned that the hard way. If you're running into any problems, that is why.
Yeah, and also I think starting the week after, we're going to add a Thursday event. So it's going to be Tuesday, Wednesday, Thursday live trade ideas in whatever markets are interesting at that particular time.
Yeah.
And I did hear a noise go off here. Let's see if we got anything.
Do we have anything happening?
No, let's go. Let's see. Let's go to ES. No, I might have had an old order sitting around somewhere.
Oh, that's never
Just
good.
go to. Oh, yeah. Oh, okay. So remember, all right. This is a great thing not to do. This is a great mistake not to do. So remember, we said on our particular on our order, we said, hey, where would you put your profit target? And I showed where we'd put our profit target, but I did it before I had a position, right? Which is a no-no. So now we're short 3 contracts.
Oh no.
I know. Now we're short 3 contracts. That's all right. We're in sim live mode, so it's not the end of the world. And we'd have to trade out of it. But that's what that noise was here. And you can see the one thing I do want to point out, if we got one more second, is just with 3 micro Bitcoins here. This is the P&L on this thing is moving. We're down $150 right now. And this could be it could be either very risky kind of market or a very profitable kind of market. So keep that in mind here. We're on the wrong side of this one, though. We in theory we had the right idea. We just executed.
Great lesson. Maybe don't put the exit before you get the entry. You should know it, but maybe don't throw it out there.
Right.
That's
But the stop is okay, because down here the stop cannot get filled until you already had your position.
Yeah.
So it's good to put the stop in right away.
Hey, and once again, you can learn more by going to NinjaTrader.com/get started. The link is again in the description. That's the screen. That's the page you'll get to. You can get a demo, learn more from Jim and all the people over there at NinjaTrader. They are the sponsor of this show. Jim will be back again next Monday right here on this channel. Any final thoughts for us for the week?
No, just I'm looking forward to Wednesday and see what the CPI has in store for us. It could set the pace for quite a bit of time, or maybe it'll be a nothing burger. We'll find out.
I don't think. But hey, I don't know. I don't think so. I'll take the other side of that bet. I don't think CPI is a nothing burger going forward. I think it's probably something that we're all going to be watching every single month when we get the data point. All right, everyone, hit that like button for us, please, and thank you. The more likes we get, the more we can have Jim on. That's the rules. I don't make them. That's just what it is. So hit the like button, please. Thank you, Jim Cagnina from NinjaTrader. We'll talk to you again next Monday, everyone. We've got SPAC Stack going live in around 20 minutes or so. So stay tuned for that. The stream will redirect to that, so you don't have to go anywhere. And every Monday at this time, 10 a.m., save your futures questions throughout the week. Write them down. Come back at this time and just ask away. That's why Jim is here. Ask away, or even better, just go to his other webinars throughout the week, which again, the link in the description. So, Jim, have a good rest of your day. Everyone, have a great rest of your day, and we'll see you down the road, Jim. I hope you can get out of that Bitcoin trade.
Thank you, Spencer. I appreciate it. Have a good day.
One.
Okay.